Good morning to you. Look to just start off with your experience having run a portfolio for some time in a market like this. Is there anything it's equivalent to? It's been a very tough year, obviously. Your fund's down, I think, 23+%, very similar to what the market is. What do you tell your clients right now?
You know, at Oakmark, we're very long-term, and we know that we invest in businesses that are going to experience, tougher times, recessions, and booms throughout their life. And, as long as they're well capitalized, we believe our businesses will be able to withstand some tougher times if we end up facing them. And, the silver lining of a market like this that's down 20+%, as you mentioned, is that we're able to uncover a lot of attractive new opportunities and add to existing ones. So, like some of the names we're here to discuss today. So, it's a very actionable period for us.
Yeah, well, that's good to hear. How do you change the action that you're actually committing to based on what your views are of the future?
Well, we have an opportunity set that we are always looking at and trying to find the best risk-adjusted returns that we can deploy capital in. And, that's part of the role of being a portfolio manager, is constantly reevaluating and thinking about how you want to position the portfolio and where the best risk-adjusted returns are. So,
right, which leads you to where, Mike?
One name we like today is Willis Towers Watson. Willis is a leader in insurance brokerage and corporate advisory. They essentially help their clients manage complex issues involving, insurance, talent management, and employee benefit plans, where they're best in class. It's a good business and a good industry, but historically, Willis had been undermanaged, and its operating margins were well below peers. Unsurprisingly, one of its chief competitors, Aon, spotted this same opportunity a couple of years ago and tried to buy the company, but regulators effectively killed the deal. Willis, as a standalone, has committed to a lot of change since then. They've got a new CEO, a new CFO, a refreshed board. They committed to a large capital return program and a big cost reduction program that we think looks highly achievable, if not conservative. And if you look at the stock today, trades for about $200 a share. If they deliver against the cost opportunity and deploy capital the way that they promised us, we're looking at a business that could earn $20 a share in a few years. And, high-performing peers like Aon or a Marsh get 20 times earnings. So we think it's a really interesting setup and upside potential there.
Yeah, it sort of speaks to the other financials, right? And the opportunities there. We talk so much about the banks, but when it can be insurers or some of these other names. So walk me through some of the other stocks where you see opportunity right now.
Yeah, you're right. Just back to Willis, the non-bank financials, we don't have to worry about, credit risk, and it's much more of a fee-driven business as opposed to a spread-driven business. But another name that we like that caters to a lot of financials is Fiserv. And Fiserv is a leader in bank software and payment acceptance technologies to merchants and financial institutions. I think in order to frame the investment thesis, a little bit of historical context would be important. Over the past several years, there have been heightened fears that some younger, more disruptive payments companies would significantly impair the growth profile of Fiserv's payments business. These younger, disruptive companies were trading at enormous multiples of revenue, while Fiserv saw its PE contract from something like 20 times pre-COVID to just 12 times forward earnings today. But what's interesting is that if you look at the fundamental performance of Fiserv's payments business, it's actually accelerated in the face of some of these competitive pressures, suggesting that, perhaps some of this was a bit overblown. And that's due in part to assets like Clover that they own, which is a payments platform that's geared towards small and medium-sized businesses, similar to Square. So, while the disruptors have seen their multiples come in considerably, there was no counterbalancing mechanism in play. The multiple of an innovative incumbent like Fiserv never recovered to appropriate levels in our view. So we think it's an interesting opportunity.
Shepard Smith here. Thanks for watching CNBC on YouTube.